I just bought Adobe. I think the stock is too cheap. I think the stock is undervalued. And I think now Adobe is a very good risk-reward opportunity in this market. The markets are expensive, and I believe Adobe is one of the best stocks if you want to outperform the market right now. So I just opened a position, and in this video I will explain the reasoning. So we'll talk about Adobe, we'll talk about the business model, I will explain the stocks I have sold to fund the proceeds to buy Adobe, and the kind of returns I expect. So we'll talk about the valuation, we'll talk about the target price. It will be a condensed video with a lot of information, so you really understand my move behind Adobe. This is the latest addition in my portfolio, and I think it's very well positioned to outperform the market in the long term. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. So I want to continue to make 20-25% per year. And I'm buying Adobe because I think it has this potential. Okay, if you look at the stock price of Adobe right now, it has done nothing since COVID. Up, down, and the business model has not changed much. What changed is the sentiment. Adobe is a winner from tech, and then a loser from tech, and then Adobe is considered to be a winner from AI, an AI winner, and now an AI loser. So the only thing that has changed for Adobe is the sentiment when it comes to the stock. And now I believe the stock is really cheap. If you look at the valuation for Adobe, we are at an extremely low level. I created a custom metric on Fiscal AI to really understand the real valuation for Adobe. This is the EV, so enterprise value divided by free cash flow. If you exclude the SBC, it's a little custom metric I have created to really know the real valuation metric, the multiple for Adobe. So I think this is the best one. And as you can see, we are at the 10-year lows for the valuation for this multiple. We are at 18. 1 year ago, we were at 40. Okay, look at this, November 2024, 40. So the valuation is fluctuating a lot because the mood is fluctuating a lot. And now the mood is really bad. The sentiment is really negative. Everybody thinks that Adobe is trash. Adobe will be disrupted by AI. And to be honest, I have been monitoring Adobe for years. I have been studying Adobe for years. We talked about Adobe inside my coaching program. It's been a few quarters now. And I didn't pull the trigger before because the stock was cheap, but I didn't have the conviction. And over the past few weeks, I did a lot of research for Adobe, especially in the last couple of days. And the last couple of days gave me the conviction I needed. It's not because of the numbers, and I made a video about this a couple of days ago. You can check on my YouTube channel. I said, I know it's cheap. What I lacked was the conviction to really believe in the thesis. And the past couple of days gave me the conviction. So in this video, I will explain the reasons that I pulled the trigger now and not a couple of months ago. Lucky me, the stock continues to drop and drop and drop and drop. And I bought 2 times. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. I bought after the earnings release, and I bought yesterday as I'm recording this video. Okay, so let me show you the portfolio right now. Now the performance year to date of the portfolio is 19.5%. If you compare this to the S&P 500, 14.5%. So far, I'm outperforming the market by 5%. Pretty happy with that. I will not complain. And now Adobe has become a 6.5% position in my portfolio. To fund this purchase, I did several things. I sold Gravity, which was the goal of Gravity, right? It's a good risk reward and a hedge for cash, just to seize the cash if you see another appealing opportunity. I reduced the exposure of Amazon, and I still want to sell more Amazon. and I reduced the exposure to LAM research. Okay, so solved gravity, trimmed Amazon, trimmed LAM research, everything to fund Adobe. And now Adobe is a 6.5% position in my portfolio. Okay, so this is the stock price of Amazon, fair enough. This is the stock price of LAM research, fair enough. And this is Adobe right now. Okay, a few days ago I released a video about the earnings report from Adobe, the earnings call, etc. I watched the video, I listened to the earnings call twice, 3 times, 4 times, and the worry I had that didn't give me conviction in the past couple of months was Adobe was getting disrupted by AI because you had free alternatives. And I maybe watched all the videos on YouTube for the past 5 years about how powerful the Adobe ecosystem is. So what I wanted to see is the split between customers, real individuals like normal people, you and I, and professionals that are using Adobe multiple hours per day. The majority of the business model for Adobe is not for individuals like you and me, small thumbnails here and there. These customers will leave Adobe. We can use Canvas for free to generate simple thumbnails on YouTube. This is fine. But Adobe is not targeting me. Adobe is not targeting you. Adobe is targeting professionals that want to have control over their tools, about their images. Adobe is targeting customers, professionals that want to use many apps at the same time to cross-use, cross-sell different platforms at the same time. Adobe is focusing people, professionals that are using Adobe and that are working with multiple partners. And all the professional industry, they are all using Adobe. I'm generalizing, but many of them are using Adobe. And it's easier to work with another guy that uses an Adobe format rather than a new format of images you've never heard of, right? Everybody's using the same app. Everybody's using the same ecosystem. It's faster, it's stronger. If you're a professional and you want to do freelance, for example, to go on Fiverr or Upwork, who will hire you? If you are using Adobe or another website? I mean, I guess people will favor to hire a freelancer that uses Adobe because everybody knows Adobe. So it's about a license. It's about the ecosystem. It's about switching costs. And I did a lot of work recently about videos on YouTube, people on Reddit, people on the Discord servers, professionals that were using Adobe. How is AI changing their work for professionals? Actually, a lot of people complain about Adobe. You would be surprised how many people complain about Adobe, individuals, but also professionals. They just complain about how expensive these were, etc. So, first of all, I did some research about the track record of Adobe over the past 20 years. I mean, even more than this. I did some research about the kidnapping of the founder back in the days. I don't know, in the 80s, 90s, you have 2 co-founders. One of them was kidnapped. I did not see any videos on YouTube, investing videos right now talking about the real track record of the company. The company has a lot of history. I can say this, a lot of history, and it will be very entertaining for you to know the track record of Adobe. You have something with Steve Jobs, etc. You have some acquisitions in the late 90s that didn't go through. Adobe has always been powerful. Adobe has always been the leader. And Adobe has always been aggressive. Meaning, Adobe has always been hated by a lot of people. They always wanted to be the leader and acquire competitors. In the late 90s, they wanted to acquire a big competitor. The regulator said, no, you can't acquire this one because it will be too powerful. So let's prevent you from buying it for 10 years. And then you had some small M&A activities. And in 2003, Adobe acquired another company that integrated the company they wanted to acquire a few years ago. So they did a lot of finessing when it comes to acquiring competition, literally buying out competition, exactly like Google has been doing for 10 years now. They are very aggressive and hated, and it is not the first time they are getting some hate. Also, speaking of hate, they changed their business model in 2012, 13. In the past, you had to buy a license. To buy a license, an Adobe license, I don't know, hundreds, maybe $1,000 to get the license for free for life. And they switched to recurring subscription business models, a subscription-based business model. People complain. You had, how you say it in English, a petition, when people vote to argue against something happening. I don't know how you say it in English. Anyway, more than 50,000 people, professionals saying, no, we don't want this. Anyway, it passed. It went through and people paid. Analysts on Wall Street in 2013 lowered the guidance because of this change of business model by 30%, 40%. Wall Street expected a decline in earnings of 30, 40%. People didn't have the visibility, the mindset, the vision of Adobe. People on Wall Street, professionals, customers, nobody knew this business model and people were not sure at all. Guess what? It worked out okay. Since then, the revenue of Adobe has only gone up and this shift has worked beautifully. Let me show you the revenue over time. Everything has accelerated since they shifted toward subscription. Subscriptions are working. And at the time, subscriptions were hated. People literally insulted. I went back there like 10 years ago. People insulted Adobe, saying, I want to leave the ecosystem, etc., etc. Exactly like we are seeing right now with Facebook. Leave Facebook, the campaign, every couple of years, people hate Mark Zuckerberg. People say Mark Zuckerberg is a robot. People say Mark Zuckerberg is not a human. And you have campaigns about leaving Facebook. Guess what? Every month, every year, you have more users in Facebook. Maybe some bots, but some users. More countries are opening up to Facebook, WhatsApp, Instagram, etc., etc. So a hated company, right? Additionally, for professionals, Adobe has used some tricks to lure customers. Meaning, Adobe is sometimes lying to their customers. When you register, you think you are registering for a subscription on a monthly basis. Guess what? You have to pay a yearly subscription. And then you want to start a new 7-day trial and automatically you have to pay. I have heard many stories of people trying the 7-day trial and then they stop for some reason, but they have some cancellation fees. It doesn't work this way. These fees are hidden. So Adobe has not been very honest when it comes to their subscriptions and clients. Adobe is squeezing all the juice they can to increase this revenue. Adobe is increasing their prices. But guess what? Even though some people hate Adobe, professionals stay. And this was the last piece of information I needed to buy it. I watched so many videos. I read so many things over the past couple of days. Professionals that say, what if we stop using the Adobe ecosystem to do our professional work? Okay, they have tried using a little bit of this new app, free app, and then this one, and then this one. And most of them conclude that, you know what, it's cheaper to use a little bit of this and this and this, but it's much faster and more efficient to just stay with Adobe. So let's enjoy the price hikes and stay with Adobe because we've been working with Adobe for decades. Everybody knows it. I'm used to it. Professionals are lazy and don't want to relearn another software. And actually, if you spend some time to learn a new software that is not from Adobe, right? This is some time not used to work. So it's a cost. You have a stickiness of products. Stickiness, you have huge switching costs. And you are not sure if people will want to work with you again. if you're using a new format, because you are the outlier that is not using Adobe. So you have a peer pressure, switching costs, a lot of stickiness. These are the signs of a moat. And despite all the hate that this company gets, all the hate is getting too expensive anyway, people are still staying. This is quite surprising. And there was another thing that I wanted to check before buying Adobe, was the integration of AI. Because for the past few quarters, AI has been on a run, and you see Nano Banana or, I'm blanking on all the names right now, but you have plenty of video generators for free that you can get from ChatGPT, Gemini, or Canvas, integrated Figma, etc., etc. All the AI tools available. And people were worried about a commoditization of Adobe. And I wanted Adobe to get a lot of traction here. Meaning, I wanted to see Adobe embracing AI and going full force in AI. And during the past quarter, this was the first quarter I saw this. The last quarter was the only quarter, the first quarter, I saw Adobe getting very aggressive, a lot of traction when it comes to AI. Now, 1/3 of the operations are AI generated. Now they are getting credits that are tripling quarter over quarter. You have found new ways of monetizing your user base thanks to AI. And this is the only and first quarter I am saying this. Now you understand why I have been waiting for so long before buying Adobe, because I didn't see Adobe embracing AI in full force. Now they're embracing AI in full force. Now they're delivering a lot of things at the same time. Okay, they wanted to acquire Figma. It failed. Well, I already talked about their track record of being aggressive and acquiring competitors. Anyway, this is not the first time it fails, etc., etc. So yeah, this is the first quarter I see them embracing AI, which is very bullish. And it reminds me a lot of Google a couple of months ago. Google was being hated. The stock went down because Gemini was not good enough. And now Google is on a run, delivering new products and new products and new products. You have the Gemini 3 Flash Pro Ultra. Every week you have new advancements. The management team is just embracing AI and going faster than ever. What if we are in an inflection point for Adobe? What if we are on a down of the cycle and now it will only accelerate when it comes to AI improvements? What if revenue increases massively from there thanks to AI? And now I want to talk about another point. If you look at the revenue growth rate, people were calling Adobe dead because the growth rate decelerated from 20% growth rate. Look at this. In the past, Adobe was growing 20-25% per year, their revenue, and now they are growing 15-10% per year. What if, thanks to AI and their credits and their new way of increasing prices, what if the revenue growth rate goes from 10% per year to 15% per year? It's a scenario that is possible. One, because of the new monetization system they have found with credits. Two, because of price increases. And I believe Adobe can continue to increase their prices the same way Microsoft Pack Office can increase their prices. Maybe you saw this piece of news a couple of days ago. Microsoft is increasing their prices. So if you want to use Excel, Word, they will integrate AI everywhere, Copilot everywhere. And for this, you have to pay more. And if you don't want to pay more, well, you don't have AI or you can just get cancelled, etc. But most people will pay up. And Microsoft has been increasing their prices for decades now because they add new tools. There is a very good chance of Adobe doing the same thing. Adobe is embracing AI. You have new AI tools, so the subscription price is getting higher. Very easy to to increase your prices, especially since most of your customers are professionals. So you have professionals that are stuck with this ecosystem, that are not enjoying the alternatives so far. They want to stay with this ecosystem. And in terms of budget, the subscription is a very small percentage of their advertising campaigns for professionals, which means they will take the price increases, the price hikes, very easily. This is my opinion. After this, maybe I can be wrong, maybe I can be right. We will see, right? But so far, I'm buying, so you know what I think, okay? So you have this, you have this, you have this. And actually, I did some research on something else. And strangely enough, I have not found anyone on YouTube talking about this one. That's their CFO. Dan Durn, the CFO of Adobe, used to be the CFO of Applied Materials. He should adopt this same policy of returning all free cash flow to shareholders at his new company. From Marcelo. It is a great Twitter post. And I've seen nobody on Twitter, nobody on YouTube, apart from Marcelo here, talking about their CFO. Because nobody can do the work, cross-read the information. Applied Materials, for those who don't know this company, it's a company in the semiconductor industry. I've been following Applied Materials for 5 years. And this guy, Dan Durn, has been the CFO of Applied Materials between 2017 and 2021. Before, I told you I did the work, right? Before, he has always been working in this tech semiconductor industry, and it seems like he has worked with hardware, and now he's moving towards software with Adobe, right? So what has been the stock price of Applied Materials during his tenure? In 2017, the stock price of Applied Materials was $40. And in 2021, $140. Always good to see the stock price when your CFO was present. What was the strategy of the CFO for Applied Materials, the largest semiconductor wafer fabrication equipment manufacturer in the world? The strategy was very simple. They returned all the free cash flow to shareholders. They returned 80-90% of the free cash flow to shareholders to do buybacks. As you can see look at this. 2017, they did a buyback program of 2%. You see the green candle here. In 2018, buyback program of 9%. They bought back 9% of their shares. In 2019, 5% of their shares. 2020, 0 buybacks. 2021, 2% buybacks. I can even show you even more proof so you don't have to do the work. Enjoy the show, guys. Take some coffee, take some tea. I'm doing the work for you today. I can show you the free cash flow of Applied Materials and the buybacks during his tenure between 2017 and 2021. Here it is. In blue, you have the free cash flow of the company, of Applied Materials. And in orange, you have the buybacks. You can see buybacks are massive. In 2018, it was almost double the size of the free cash flow. In 2019, almost 100% of the free cash flow went into buybacks. 2020, 0. 2021, almost 100% of the free cash flow went into buybacks. And now he's going to do the same with Adobe. You can see the exact same pattern happening in Adobe right now. You can compare the free cash flow. You can compare the buybacks. You can compare these two charts. And you can see the same trends. Okay, fair enough. Yeah, am I done with that? Yeah, this was... Okay, fair enough. This was a slide from Applied Materials. Fair enough. This is for Adobe. You see that before 2021, you had more red than blue. Okay? So, I can show you even better actually. I can go to my custom metric. By the way, you see me navigate on Fiscal AI. You have a discount code in my description if you want to use this wonderful website. It will get 15% cheaper if you use my discount code affiliate link in the description. Yes, do this. So if you're not using Fiscal AI, you are missing out. You are wasting your time. And if you want to use Fiscal AI, use my link. It will get 15% cheaper for you. Okay, so before 2021, with all the CFO, in orange, you have the percentage of operating cash flows that went to buybacks. Meaning, here we go. In 2021, 50% of the operating cash flows were used to do buybacks. And now you have a new CFO that increased this immensely to 70%. And now it is increasing to more than 100%. So it seems like this CFO lacks efficiency. It seems like this CFO loves buybacks. It seems like this CFO lacks free cash flow a lot. And I can even tell you that he's a ex-Navy person, so a very disciplined military management style, and the numbers show it. The numbers show that you don't go into some moonshot projects. This guy, ex-military, focuses on discipline, buybacks, doing the same thing because it works. It has worked for Applied Materials. It will work for this one. As long as the business is fine, you do buybacks, you stay in your line and you're fine. It seems like this Dan Dern is doing exactly the same thing. And as you can see here, now they're allocating 100% of their operating cash flows towards buybacks for Adobe. I can show you again the blue line and the red line. The red line here is the free cash flow of the business. Don't mind the drop here. It's because the company had to pay a $1 billion penalty because of their acquisition. Anyway. And in blue, these are the buybacks. Now for the last 12 months, this is a business, Adobe, that is generating $10 billion of free cash flow. And they did $11 billion of buybacks, which means they can do a lot of buybacks. And they are doing a lot of buybacks. If you check the amount of buybacks this company is doing, you can go here, percentage change. Here we go. Before 2021, the company was buying back 1% of their shares every year. After 2021, everything accelerated. Now they're buying back 5% of their shares. You have seen what the buyback program was for Applied Materials. You can now cross-read between these two companies. Maybe they will not do massive buybacks every year, but the strategy is very much the same. They will focus on buybacks. The CEO of Adobe went on CNBC recently saying we are committed to do more buybacks. Now we have a buyback program of what? $25 billion? They can do more. They can continue to do buybacks. Now Adobe is a graal for a CFO. Before, the CFO was focused on hardware. Now he's focused on software with very high margins, subscription-based business model. This is the golden scenario if you are a CFO. Now, if we go to Stock Unlock, we can use a DCF, discounted cash flow model. I believe Stock Unlock has the best DCF tool right now. So you have a discount code in my description to get it cheaper. Stock Unlock is by far the best DCF tool because it's simple and it works nicely. On the DCF, you want to put your estimates. What do you think the growth rate will be in the future? So if you think the growth rate will stay the same and the free cash flow of this business will grow at 10% per year, if you think the business will do buybacks, what can you put? 3%, 4%, 5%? Let's put 3%, And if you think the price to free cash flow will be 30, you can play. What is the good price to free cash flow for this business? You can check. You can check what has been the price to free cash flow overall for Adobe. Price to free cash flow over time. Look at this. For the past 10 years, the average price to free cash flow has been 32. and the median has been 33. So actually, it would not make, it would not be crazy to put 30% in the 30 in the DCF, a price to free cash flow of 30. I will not do this because I want to be conservative. But just in case for the exercise, if you think the multiple will come back to the average, then the stock is a double from there. The fair value is at $800 compared to right now $300. And if you buy right now, you can expect a CAGR of 29% per year. So it's lovely, but I would not get hyped up for this one. If you think the price to free cash flow will re-rate from 15 right now to 20, it would be more reasonable. 20 means we are back to where we were in March. Okay, if you think this business deserves a price to free cash flow of 20, then the stock is undervalued by 50%. The intrinsic value is $530. And if you buy right now, you can expect to generate a CAGR of 19% per year, almost 20% per year. So a simple re-rating to price to free cash flow of 20 with a growth rate of 10% and some stable buybacks give you 20% per year. And I was conservative with the buybacks because of everything what I said about the buybacks, the CFO, ex-Navy SEAL, discipline, a love for shareholder friendliness. Maybe the buyback program will be more, maybe less. If you put 4% buybacks every year, you are enjoying 20-21% per year. And so this can be the base case scenario and the reason why I just bought Adobe. What if you have a bear case scenario? Instead of growing 10% per year, you are decelerating and only growing 5% per year. If you only grow 5% per year, I think they will do more buybacks actually. If you deserve a price to free cash flow of 15, then for the bear case scenario, the fair value is $318. And if you buy right now, you can expect a CAGR of 7-8%. So in a bad scenario where things go down, and if we have a scenario where Adobe is losing, you can still make money and generate 7% per year. Now, this was back to the fair base case scenario. What if we have a bullish scenario? Because, everything can happen, right? This is not the first time Adobe has pivoted. I told you before, I checked the track record of the company. Adobe is known for being hated. Adobe is known for being transformative. And it is not the first time they completely changed their business model. 10 years ago, they did exactly the same thing. They were doubted and they won. What if they win again? It's a probability, right? Well, if you think the free cash flow will not grow at 10% per year, but by 15% per year, then if they deserve a price to free cash flow of 20, the fair value is $670. And if you buy right now, you can expect a CAGR of 25% per year. And I only put 15% growth rate. I told you in the past that the business was growing revenue at 20% per year. By the way, what has been the growth rate in free cash flow? Because I was talking about the revenue, but what about the free cash flow? Free cash flow growth rate over time, this is what we have. Okay, so fluctuating a lot, and you had to pay a fine of $1 billion because of the acquisition of Figma that didn't go through. So this is why it is going down. Fair enough. Yes. Okay. Over the past 10 years, the average growth rate for free cash flow has been 23%. So if you want to salivate, I know some of you want to salivate, right? So let's salivate a little bit. If you put 20% growth rate in free cash flow, like back to business, back to all-time highs, the business is firing on all cylinders in the extreme optimistic scenario of the business growing 20% again, then you can expect a CAGR of 30% per year. I will not put this as my base case because it's extremely optimistic and I want a few quarters to really see the strategy evolving. But I'm just putting this for the sake of the exercise. We have seen the bear case, we have seen the base case, we have seen the bull case. But in all three exercises, I like the odds. I like the risk reward. And I told you I just got some conviction in this pick. So I believe you have more chances of being right than wrong if you are bullish Adobe right now. The stock is really hated. The valuation is really appealing right now. Okay. So yeah, this was for the DCF. I think the stock is really cheap right now. Adobe is a company with a wide moat, a lot of efficiency. They are now embracing AI. You have 90% gross margins, recurring business model, net margins of 30%, free cash flow margin of 40%. They are allocating all their free cash flow to do buybacks now. I believe they will reaccelerate because of AI. They don't have a debt problem, and they are trading at the lowest valuation we've seen for the past 10 years. This is my pitch for Adobe. Maybe I'm right, maybe I'm wrong. But anyway, I'm taking the shot here. I'm taking the responsibility. After all, it's my portfolio. My portfolio is public. I have more than 300 people copying my portfolio. So I have an AUM, roughly $1 million for other people's portfolio to manage. And I'm taking the chance with Adobe. I think it's pretty good. So I will let you know any updates on Adobe, if I'm buying more, if I'm trimming. Maybe I will change my mind in 6 months. Nobody knows. But I will monitor very deeply what is happening with Adobe, and I will continue the research. I hope this video was helpful to you. You learned new things. Don't hesitate to comment, to like this video, to subscribe if you want to have more content like this. And I see you tomorrow. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.